small multifamily, some vacant land, and looking to get into small commercial as well. Yeah, happy to answer any questions specifically around that, or really just anything in the real estate industry. Definitely a strong advocate for people getting involved, even if it's just one or two properties on the side, and hopefully can find some helpful information here today.
Hi, everyone. I'm Allison Doyle. I am, I've been at the Research Park, which is a commercial real estate development associated with Iowa State since 2008. I'm an Iowa State grad, grew up in Ames, moved back here to take this job. And several years ago, had the thought that since I've been in commercial for as long as I had, that perhaps residential seemed a nice thing to do as well. I thought that it would be fairly similar and it could not be more different, which I'm sure we'll get into at some point today. Most of my personal investing has been on my own, through my own houses. Have had an Airbnb as well. Looking forward to the conversation today and seeing where it goes.
Awesome. Thank you all for introducing yourselves. So the first thing I want to talk about is just in general, what is real estate investing? And we actually already had our first question, and so maybe we can bundle that with this. They asked thoughts on how the current market is impacting this side hustle. And so let's talk a little bit about what this side hustle looks like, what all might be pertaining to that, and then how the pandemic has affected it.
Saw Allison kind of laugh, and I did the same exact thing too, because this is a crazy real estate market right now. I'm sure, you know, even in North Iowa here, our market's not as big as Ames and Des Moines. So I'm sure Allison probably feels the same type of effects down there. But the real estate market is very strong right now for sellers. Due to the pandemic, interest rates dropped to basically all-time lows, the lowest that a lot of people in this industry have ever seen. So right now they're hovering around 3%, which is very low. So it's causing a lot of buyers to go out and look for properties because of the low interest rate, but not enough sellers are selling. So it's a big supply and demand issue right now. So houses are selling above asking, waiving appraisals, inspections, all that crazy stuff. That we as real estate agents do not advise our clients to do, just to protect their investment, of course. But I mean, for me, it's more than a side hustle, but it is definitely a big hustle right now. Whether you do it part-time, full-time, you have to hustle for your clients and for yourself if you're looking for investing too, because properties go very quickly right now.
Yeah, I would just add, I mean, everything that Jessica said, when you're doing it on the side as I am, I try to do between 6 and 12 deals a year on top of my regular day job. And I only work based off of referral. As she mentioned, if you can get people who are selling their houses, then it's pretty easy right now, in particular, if those houses in our market, and I'm talking Ames City proper, I'm on the Des Moines MLS as well, but most of my comments will be focused on Ames because I know that market a lot better. The house is under $300,000 and it's priced right. You're looking at multiple offers and probably multiple offers the first day that it's on the market. So if you're on the buy side and you're representing someone on the buy side, God bless the buyer's agents in this market. It's awful and a really hard thing. So to give you some perspective, I listed a house a few weeks ago for a little over $200,000 and it showed 19 times in the first day and had 6 offers by the end of the day, all of which were a large percentage over asking price and all the things that Jessica mentioned. So probably never been more imperative to get someone that knows what they're doing to represent you. As you're doing this, a lot of people want to try to go it on their own. But even on the sell side, while it's easy to sell your house, you want someone who knows how to deal with multiple offers and how to leverage one against the other to get you the most that you possibly can. From the investment side of things, I think the thing that I worry about the most for people buying in particular is appreciation. So houses in our market will appreciate at a certain percentage year over year right now, obviously, because the market's so crazy, they're appreciating more. But if you're going to buy a house that's say $200,000 to $250,000 in our market, when you're representing a buyer, if suddenly that house is listed at 200 and you're paid 230 or 245 for it just to win the deal, what's it going to be worth in 3 years if you want to go ahead and sell it because you started a family and you want to move on from there when the market has changed? So in particular for this audience, as people are starting out, I think that's something that's really important to think about.
Yes, that kind of led me into our next kind of point of conversation is this whole idea of what the market is and understanding what that means and why somebody should care about it. So maybe you can talk a little bit like 101, what are market trends? Why should anybody care about it? And who in particular should care?
Yeah, I can speak to that a little bit. I would say one of the things as an early real estate investor that's important to do is identify your niche and strategy. We've talked, a lot about single family home ownership, and that's a great option that's accessible to a lot of people to get started. There's a lot of other strategies within real estate that you can look at. One thing I'd encourage to look at as well is kind of the concept of house hacking. Duplexes in particular, or small multifamily properties, work really well for early investors who are able to get conventional financing and live in one of the units while they rent out one or two other units on the side. That's a really good option, and that's kind of trending right now, I would say. Other sources of market trends, I think it's really important to talk to realtors. We have a couple great realtors here on the call. Other people in your local neighborhood. And really, I would encourage you to look as specifically as you can. For me, I try and find neighborhoods that have a great track record of appreciation, but still have upside in terms of where the neighborhood will go in the next few years. And so I try and identify those neighborhoods and find local neighbors or realtors who have experience specifically within that little micro market. Other sources for trends, I would say there's a lot of brokers and agencies like CBRE here in Des Moines that put out market trend reports, specifically around multifamily and commercial real estate. Those are annual, if not more frequently. And that's a good starting point just to get a pulse on like what the average sales prices and rental prices are in your market.
We're getting a lot of great questions in chat. Keep them coming. Everything so far we're going to get to in the next few slides. So I'm going to hold off on those a little bit, but that's great. Please keep interacting with us there. So just to finish up this idea of market trends, can you all talk about like, how do you know what the market trends are? How do you stay up to date? Are there good resources where somebody can be staying up to date with what they are? And how do you analyze them and know what that information means for you on the investment side?
Yeah, so I'll kind of go first with this question then. Looking at the economy as a whole, it's important for, all of us as business professionals to keep an eye on things. The housing market is a very good indicator of where the economy currently is at and kind of where it's going in terms of interest rate, supply and demand, because housing is something that everyone needs, whether you're, because everyone needs housing. So that's a good indicator of the economy as a whole. And I see one question from Bernie too, crazy meaning bubble. So when, this market is something that we've never seen. COVID kind of shook the whole economy up. So when I say crazy, I mean different. But I'm not an economist. It's hard for me to predict the future. But it's way different from when, we had the recession, 9/11, just because before, when the housing market crashed before, there was a lot of sellers that could not sell their properties and not enough buyers to buy them. People couldn't afford houses. They were losing their jobs. They couldn't afford it. Now it's the exact opposite. There's a ton of buyers out there who are qualified and ready to buy something, but there's nothing out there for them to purchase. So that's what's causing the prices to go up is demand. And not enough supply. So it's different. It's hard to tell when the market might switch back to normal or if this is going to be, if there's going to be a new normal that's coming out there that we're all going to have to adapt to. So, it's a little bit different right now, but the Iowa Association of Realtors does post public reports out there for anyone to look up if you want to know where the housing trends are going, average marketing time for a property, the days on market from when, it gets listed to when it gets sold and closed. There are good reports out there that are free for you to have. Me as a realtor, I have access to our MLS, which means multiple listing service. So I have all the data and everything from my market that I share with clients or pull comps and do comparative market analysis, for different clients for property values here in our market. And, any other realtor too. I'm sure Allison has access to all of that same stuff too. Ryan has his own method of doing that as well. So yeah, there's different ways you can find that information.
Awesome. Anything else market trend related that anybody would like to add before we move on?
I think one thing just to throw out as far as Ames is concerned, and then even Iowa to a certain extent, is when the housing crisis happened the last time, depending on who you talk to in our market, people might tell you that we were really unaffected by it in a lot of ways. And when you compare us to other places, you can make a blanket statement like that. It's not a recession-proof place that we live in, but there's not the extremes here because our houses aren't worth as much as they are in San Francisco or in Denver or one of those big cities. So you're not seeing these huge fluctuations. And in my mind, that just makes it more imperative that if you want to invest in something, some place or in a property that is not your home neighborhood or not where you're from and not in a market that you don't know, to get to know people who live there, to really get the intelligence from them, from their local sources, because a lot of people just go to Zillow and places that are using an algorithm, and it can vary radically even within the town of Ames for the exact same house if it's just on a different street. And the example that I give here, since we're all at Iowa State, is that neighborhood that's right next to the football stadium. Houses over there can go for 25 to 40% more than that same exact house would go at a different neighborhood in Ames. And that's something that you want to know if you're going to invest in something.
Yeah, that's a great point. So before we get to the questions, we did have one in chat that asks, in general, what does real estate investment involve? And so I thought this might be a good place to stop and answer that.
Ryan, do you want to start?
Sure.
We're
Yeah.
both looking at you, Ryan.
Yeah.
No problem. Yeah, I would say, real estate investment in general is using property as a vehicle to generate wealth. And that can come from a short-term strategy like house flipping or buying land speculatively to sell for development, or it can come kind of passively over a longer time frame, whether that's appreciation in your own home or rental property where you're getting a little bit of income every month from rental income, and then over long term you're paying down the debt service on that to gain more equity. So there's a lot of different ways, different strategies like I mentioned, but in general it's using properties to accumulate wealth. And so this slide I think does a good job of looking at that just from a really high level. Basically, if you're treating real estate as an investment or a business, you need to make sure that you have an asset and liability spread and that you have more coming in profit than you have in cost going out. And so specifically on real estate, your costs are going to be the land, the property that's currently there. If there is a structure, usually you buy that together, you buy a house with the land, but sometimes you could buy vacant property or partition off smaller lots and build property as well. So I like to treat those a little bit different. But you have the land, the property, and then your holding costs over time. And so some of the ones that mentioned here are utilities, maintenance, and insurance. You also have property taxes and then debt service. And so that would be if you have a mortgage or a lender involved, you're going to pay an interest rate either monthly or annually to them, and you need to factor that into your costs as well. So on top of all of those expenses, you want to be in the green and have income above that, whether that's from rental income or in the case of flipping like I do, it usually comes at the end of a project in realizing a profit by selling the property for more than what you have into it.
So when you're going into a potential purchase, how do you make sure that you are making a good investment? What are things that you look at? And I know we talked through some of these costs, and I'm sure that's part of it. So how do you know what those costs are before you make the purchase?
One
Yeah.
thing that I talk to people about on the residential side when we go through a house is it's really easy. And again, in particular in this market where you're stacked up, people are waiting to get into a house behind you. You get in there, you're excited. It looks pretty swanky and sweet because it's all staged up. I counsel people to really think about and consider the things that either you can't see or that will cost a lot of money that are not sexy. So who cares if there's sweet furniture in there? That is not going to be in there when you buy the house. If the roof has holes in it and the furnace is super old and the HVAC needs replaced and it's knob and tube wiring, you're looking at a substantial investment if you want to buy that property before you can even touch the paint on the walls. So that's sort of step number one in my mind for framing the thinking around things. Some people are handy and they can do that stuff themselves, but it's pretty rare. And the cost of construction materials, because the market is bonkers, all the way across the board is very, very inflated right now. So a roof that might have cost $10,000 a year ago is probably going to be 15 to 20 today. Part of that's derecho. I mean, there's a lot of factors in that, but that's the starting point. So you have your down payment that you're going to need to make, which is a percentage of money that you're putting down. So let's say 5 to 20%. If you put down more than 20, then you're going to eliminate the need to pay insurance on your mortgage. And then you're going to have to pay for your inspection. You're going to have to pay for your appraisal. And then you have to pay for yourself to move in there if you're going to move in there yourself or whatever comes with that. And then closing costs, which are about $4,000 to $5,000 for each transaction on the residential side, depending on your loan.
Ryan, do you have anything to add good investment wise on the flipping side? That's a great overview for like home buying for personal use. So thank you, Allison. That was really great. Lots of things to consider, which people don't always consider when you first get started. So I'm sure all of that plays a role, but is there anything else for flipping that you think about?
Yeah, I would say in general with flipping, your goal should be to purchase property at a discount. It's really tough in the Midwest and Central Iowa in particular to buy property at market value, renovate it in a way that's ethical and safe and quality, and then sell profitably. Typically, I'm purchasing properties that are distressed, either physically from years of kind of neglected maintenance and deferred maintenance that has just taken its toll, and the costs and everything adds up so much that a typical homeowner wouldn't be able to get financing or do those repairs themselves, or sometimes from a financial distress as well. So we don't have the foreclosures in Central Iowa that we used to after 2008, but there's still a pretty good stream of foreclosure properties that the bank is already in the process of taking back and would either go to auction at the county sheriff's department or potentially go back to the bank and then list it at somewhat of a discount from market rent or market rate. So in general with flipping, I'm looking for properties that are discounted. And in my market, that usually means, like price point wise in Des Moines, I've purchased anywhere from $1 to about $150,000. And then the average sales price on my homes here is about $280,000. And now with this market this year, it's a little bit higher, but that's a general price swing that I look for. So you need to look for neighborhoods that can support buying on the low side, renovating, and then selling on a high side. Oh, one other thing I would say too, in house flipping that's probably different than residential single family purchase is oftentimes I'm buying properties with cash. So that's something that I can offer as an incentive to a seller, is that we don't have appraisals or any of the requirements a bank would have, because I'm purchasing the property 100% with cash, and usually without the typical inspections that a homeowner would want to have, just to, you know, make sure they're making a good investment. I'm able to do that in-house and then offer cash, and oftentimes are able to get deals that otherwise we wouldn't be able to because of that.
One other thing too that I just want to add, like for flipping, I have a lot of investor clients that do this, and you know, just because you put, you know, $10,000 worth of upgrades into a home does not mean that it's worth $10,000 more for property value. I have a lot of, that's a very common misconception. So, you know, if, you know, you're an investor and you work with a certain real estate agent, make sure you ask their opinion before you just assume that, you know, if you do X amount of dollars worth of upgrades by adding a new flooring or paint, whatever it may be, make sure that it's worth more than whatever amount of money you're putting into it. Because it might not be. And then also go neutral too with, you know, different, you know, finishes and selections you pick out for flooring and whatnot, just so you can appeal to the most amount of buyers if you do want to sell it for a profit. Just because it's a more, you know, if you're going to be spending money, make sure that it's going to give you the investment that you want, or the maximum investment that you can get.
This is all great stuff. So we had a question for you, Allison, to clarify the insurance. Can you talk a little bit about what mortgage insurance is and the 20% down payment, how that affects it?
Sure. So depending on what loan product you have, it might look a little different, but the general rule of thumb is if you put less than 20% down when you buy a home for what you're borrowing from the bank is going to make you insure the loan. And they have all these steps in place that they make sure that the house is worth enough so that if you get up and leave one day, that they're still going to make a decent amount of money off of it, and they can recoup the money that they're losing off of the loan. And that's what that insurance covers. That does not take the place of the homeowner's insurance, which you buy to cover if your house burns down or a derecho comes through or whatever the case may be. You have to have that as well. And you will agree when you buy a home, when you finance it, that you will have both for a specified period of time. Once you pay your house down or your mortgage down and you get to that 20% level, then you can go back to the bank and you can ask them to remove that insurance from your loan. And it happens automatically, but usually not for like a year after you reach that threshold. So you need to go back and physically do that yourself and initiate that process if you want it to happen the day that you reach that 20% point, which a lot of people don't know. So different products. Thank you for asking that.
Somebody also asked, how does debt leverage interact with investment? Do you try to maintain a certain ratio or percentage when you're looking at investments?
I think that's really dependent on what type of investment you're looking to make, if it's a short-term or long-term hold, as well as what the general market is in your area. I think obviously for rental property in general, most investors are willing to accept a lower annual return on that because it's generally viewed as a less risky investment than house flipping. So for me personally in Des Moines, generally look for about a 7 or 8% return on rental property, and that would be calculated as a cap rate. So that's a key difference, whether it's commercial or multifamily property. You generally don't value those type of real estate investments on a cost comparable method like you would in single family housing, where you're using comparable sales. You would be using an income-based approach. So in multifamily and commercial, you look at total investment into the property and annual expenses, and then you calculate a market value based on your return above those expenses. So around here, a 7 to 8% return is generally pretty good. Our cap rates are a little depressed right now with the market in multifamily as well. So there's people buying anywhere from a 5 or 6% cap on recent deals that I've seen. So a little bit lower rate of return. And then on house flipping, for me personally, 20% annualized return is what I shoot for. And so that's obviously a lot higher than a rental property, but there's also quite a bit more risk involved when you're making a significant upfront investment to purchase and renovate the property, and then sitting on it potentially for a while you do that before you can sell. So those are some percentages that I use, but again, that's really market dependent. I'm not sure if Ames would be the same, and if you're elsewhere in the Midwest, it might be completely different. So
Allison, did you have something to add?
I was just going to ask Ryan if he self-represents when he sells, because that's another thing to factor in if you're flipping a house, or just in general, when you're on sell side, that's where you pay commission for a realtor to help you. You don't pay it on the buy side. So it's generally in our market 6%, 3% goes to the list agent, 3% goes to the buy side agent, and then there's a split of that money on both sides that goes back to the brokerage. So if you're looking at anybody who is buying a house, flipping a house, wants to move it quickly, and you're getting represented by an agent on the sell side, you're going to have to factor that 6% potentially into your costs as well.
that's a really good point. Yeah, and one that I see a lot of early investors maybe not realizing. And with my business strategy, I factor that into my costs, and I lean really heavily on a professional realtor. For the last 5 years, I've worked with the same realtor, and we're able to utilize her expertise to come up with the strategy and a target price point, and get her opinion on most of the improvements we're making as well. Like Jessica was mentioning, that's really important, not to just go blindly into the project thinking that what suits my taste is going to be received well at the market. So that's a really good point, Allison.
Awesome. So I want to pause here and answer some more questions that are all kind of related to how to get started. So we had more than one question about any recommendations for getting initial down payment when getting started. And I think also maybe a specific question for you, Ryan, was how do you pay in cash when you first start? And is that possible? So maybe let's just talk about like the initial investment and how you get there.
Sure, I can speak to my experience in that. I actually started with a partner and a realtor contact of ours my senior year at Iowa State. And so while we were finishing our program, we found a local realtor who was also interested in investing in real estate, but was busy with his business, buying and selling homes for clients. And so we partnered with him to purchase the property that was a foreclosure, and he found the deal, financed it, and then we did the renovation work, physically, the construction, and managed some subcontractors to get the project renovated. And then we split the profit when it sold. And so that was a really good way, in our experience, to gain access to a project that we didn't have the cash to purchase ourselves. Obviously, we didn't realize the full profit, but it was really valuable learning experience, and we still came out ahead for our time. So that was one strategy that worked for us. I would say other early investors, there's a lot of information out there, on house flipping with other people's money. And I have utilized that, and it's a strategy that works well, but can be pretty risky. And so I want to make sure everyone, just does their own research on that and the true cost involved. But I've utilized private money, and on rare occasions, hard money for deals as well. So if you don't personally have the cash to purchase and renovate properties for flipping, there are lenders out there called hard money lenders that will essentially act as the bank for real estate investors if the deal works, and finance the property at a much higher interest rate than you would pay at a bank. I prefer using private money and have had pretty good success with that in my business. And so one of our early investors in RallyCap was a business contact that I had made on an internship in California, and was interested in being an early investor in us. He was used to the market out there, and obviously our price points are much more attractive for purchasing property and selling property. It's just a lower dollar value. So we were able to secure about $100,000 loan from this contact of mine at, initially we were paying 10% interest. So a high interest rate, but that provided the cash to purchase a property and renovate our first one in Des Moines. And then when we sold that, we realized some profit and started building our own cash reserve to ideally lower the debt down the road. So those are a couple options if you don't personally have the cash. There are banks as well. I would say like getting in front of lenders at local banks early is important. Even before we were actually going with loan requests, I tried to meet with bankers around Des Moines and kind of introduce myself, show them the type of properties we were looking at and our anticipated margin, and then came back after the deals were completed to show them that they had been successful. And so that started building trust even before I went to someone and said, hey, I need a loan for this property like in 2 months or something. You generally want to get those conversations started early, whether that's single family or as an investment. You want to be talking to lenders well in advance of when you actually need a loan.
So in my case, because this has always been side hustle sort of thing for me, I worked 3 jobs to save up enough money to buy my first house and make the down payment for that. And I think I put 5% down. I mean, on a $125,000, $130,000 house. And it was a huge deal to me at the time. And I basically didn't sleep for a month because I had no idea how I was going to pay for it. So as soon as I moved in, or even before I moved in, I'd talk someone into moving in with me to be my roommate and pay me rent so that then I could take that couple $100 a month right off the top of my mortgage and give me a little bit of maneuverability in my spending. So I had to work really hard at my credit, had a couple bad years where I went crazy and needed to repair some things. So actually went talked to lenders about what that meant. And what that meant specifically to buy a house, increasing your debt to income ratio, paying down debts. So, I mean, just you think in your head, like, well, she had to have 3 jobs to make what, $5,000 or whatever it was. It wasn't that. It was that I needed to pay off 2 credit cards and then save $5,000 and then get this roommate lined up before I could move into the house. And then when you move in and it's your first house, you have to figure that you're going to need a lawnmower and all the stuff that goes with the house. So you spend, a few $1,000 at Lowe's or Menards straight out the gate as well. So then I took that house, worked really hard to get that 20% ratio, and then didn't have to pay mortgage insurance anymore. So my payment went down, and then started socking that money away. And then used the profit from that house to buy the next house at 20% down, pulled money out of that, and used that for the next one. So takes a lot longer when you do it that way, and a lot more methodical, but that's how I did it.
Yeah, Ryan mentioned something really important too. Start building your database of contacts, whether it's, building a relationship with one realtor or real estate agent that, get to know the market and get to know the trends. Even if, you might be a year, 2 years, 5 years down the road from actually getting your first investment or buying your first home. And then also building, local contacts too with lenders, different mortgage lenders. They can even set you up too on receiving different email communications as well. If you want to keep an eye on interest rates, they can send you, market trends that they get as well. And just building that good relationship from the beginning. And that way, if you come across a question or, you want to get ideas for how you can better your credit score or lower your debt to income ratio, which is also important too, if you're going to be getting an investment loan. Having less debt, they'll give you more money for, the loan overall, if you're buying multifamily, single family, or even doing home improvement type of loans as well. So yeah, there's a lot that goes into that, but yeah, building that database is super important for you to start now.
Awesome. That was all really great. So thank you all for sharing your personal experiences and how you did it. I think that's really helpful to let people see kind of what maybe it could take. Now I kind of want to talk through the 3 different areas that we have represented here. And so I know this slide says home ownership, but I also want to talk about being a real estate agent, how you do that, what was the process, why did you decide to do it? So Jessica and Allison, if you have anything to share, we've talked a lot about purchasing a home. So maybe on this side, we can focus more on being a real estate agent.
Yeah. Okay, so I'll go first. So I became a licensed realtor in 2018. And you have to become licensed in order to sell real estate for a profit or for income. That's the state law. So I went through the Iowa Association of Realtors to do all the education courses that are necessary, because you actually have to test out. You have to pass both a state and a national exam to get your real estate license. And they talk about different things like real estate law, understanding the different types of deeds, the different types of ways you can take ownership in a property, what certain things you can say and you can't say, fair housing laws. There's a bunch of it that goes into it. So education is super important. And the Iowa Association of Realtors website can line it all out for you of what's actually required. So there's many different courses. There's a 60-hour course plus 3 other courses you have to take in order to get your license. And then you have to keep up on continuing education courses too, because real estate laws change. New trends come out, new technology comes out. So just to stay on top of it, they make you, take a certain amount of continuing ed credits, every couple years in order for you to renew your license. So it is kind of a big investment, going into it, because the education is not, it's worth the money, because you learn and you can better help your clients and, get a better understanding of the market. But it is very expensive to get started. I was luckily self-employed at the time, so I had the time to devote, driving back and forth to Des Moines to take these courses, because it's a big time commitment and money commitment at the same time. So yeah, that's kind of, what it takes to get started, at least in, in that regard. I don't know if Allison, you have anything to add?
So I did all the same things. I took the 60-hour in-person course because multiple people said that, or had shared with me that they flunked it when they tried to take it online the first several times, and that the in-person class was a lot better. So that's what I did, and I passed first time. So I tell everybody the same thing.
I agree to that, by the way.
A lot of that is because the instructors typically will go and take the test a few times themselves. And so they'll go through the book and tell you what you need to know versus what's more theoretical stuff that won't show up on the test. The other thing that I wasn't perhaps totally prepared for in my head at the time was, I realized, because it's pretty clear on the website how much all these courses cost. You get a background check as well. And so you're waiting for that to show up, but then you have to hang your license at a brokerage. So you can't just come out the gate and say, okay, I'm licensed and now I'm going to go sell houses because I'm qualified. You have to be represented by a brokerage. So you need to interview with brokerages to see if there's a fit there. And then the brokerage will offer you some form of service in return for you hanging your license there. After you've worked for a particular brokerage for 3 years, then you can sit for your own brokerage license, choose if you want to take that on yourself. But I didn't necessarily realize that. I thought I'd be able to hang out where I'm at right now and theoretically sell a house here and there. And that's not how it worked. The other thing is you pay to have access to the multiple listing service. So Jessica talked about this earlier. There's a multiple listing service that represents central Iowa that extends over to Marshalltown-ish. North, there's some houses in the Mason City market that'll show up on our MLS, but that's not our MLS. And then down to Ankeny, but Ankeny also overlaps with the Des Moines MLS, another fee. They don't play nice with each other. So I'm on the Central Iowa MLS. I'm also on the Des Moines MLS, and I have to pay an annual fee to belong to both. And then you also pay for errors and omissions insurance. I'm at a brokerage where they pay for that for our agents, but I've been at a different brokerage where that was not included, which is another fee on top of it. So I tell people, generally speaking, you got to sell a house straight out of the gate in your first year to pay for your education. And then you got to sell another house to pay to keep yourself going. And then after that, you'll be making a little bit of money. That's kind of how I think about it in my head.
Awesome. I think that was really helpful to share a little bit more detail. So thanks. I want to make sure we get to everything. So I'm going to keep trucking along here. We had a question in chat about pricing rental property. So maybe let's just talk about first of all, how do you decide when you purchase a place that it will be a good rental property? Are there things you consider? I know that we talked about like duplexes, but maybe we can also talk about if there is, like if it's going to be a full rental, or if you're going to live there and rent out a portion of the house, kind of what do you look for?
Yeah. Oh, Allison, you just unmuted yourself. Were you going to say, I'll let you go first if you were going to say something. I was just going to make one quick comment. So I service both Mason City and Clear Lake. Clear Lake is a very, if anyone's been to Clear Lake, you probably know it's a very popular vacation destination. A lot of people, even from North Iowa or even in the Midwest, like to come to Clear Lake for fishing or the community activities they do, the events, the surf ballroom for concerts and everything. So I have a client right now who is very interested in opening up an Airbnb. So she has family in the area, so she would be coming and staying, for a couple months out of the year, but then renting it out to help pay for the mortgage and the expenses on the property as well. One of the things that she is looking into is, for fishing and everything, when the water's frozen over and there's not many events going on in the winter time. And, here in North Iowa, we have longer winters than maybe Southern Iowa. So, it takes longer for the lake to thaw out. So our window of winter is a little bit longer. So, she's estimating, 5 months or so out of the year is, the property is not going to have as much, as high of occupancy rates or booking rates. So we're trying to kind of work through that and figure out, what are some other ways that income can be brought in those months to help offset the expenses, because the mortgage is still going to be due every month. So how can we, kind of make sure it's a smart investment for her to make sure that that's something that she wants to do. So, creating a good plan to figure out, each season, because, vacations, Airbnbs, figure out what events are, hosted annually in the community that you're looking at. Figure out what type of people are going to be, renting out those places and making sure that, you have a plan for if you have 4 months with only, a few days being rented, what are you going to do to make sure that your bills are still getting paid?
Yeah.
So first thing, go ahead.
Okay, thanks. I saw a couple of questions on pricing, and I would say just on the topic of real estate as an investment, I think it's generally best to work backwards from what you anticipate income being on your rentals. And there's only so much that someone would be willing to pay for any particular space. And so I think Airbnb has kind of created a second market for rentals in that you're able to get higher rents for property. But one of the mistakes that I see investors making is not realizing there's quite a bit more management and communication and turnover on those properties. You need to be cleaning it much more regularly, getting in there in between each guest and making sure that it stays in a good quality condition. So you have to factor all of that in when deciding what strategy you're going to use. But I would say in general, it's best to start with what a realistic market rent would be, whether that's Airbnb 60% of the year, or a long-term tenant that would be signing a year-long lease to live there, and then working backwards into what you could pay for the property and still make a profit. I think it's really easy in real estate to kind of see that next shiny object and be watching the MLS and all these properties coming along, and you're hungry to get into the game and you just want to get a property. But I say no to a lot of deals that cross my plate just because I want to make sure that I have a comfortable margin and that I'm not getting into property that will be tight or, could potentially flip that cost ledger and go into the red. You really need to be prudent with what you're buying and make sure that you have a margin there. So pricing wise, for me, I look at average rents in an area. If I'm buying for rental property, generally try and go a little bit above that if we're going to renovate the unit, but keep it realistic. I think a lot of early investors think that they'll be able to renovate a property and get a rent that there's no precedent for in that neighborhood. And that may be the case, but you're kind of taking a big chance doing that. So setting a realistic budget and rental price point early on is important.
I'm gonna hit two ends of what we just talked about. The first is the pricing thing. So when I first got into this, I made the mistake of, in particular in the Airbnb space, you go and you look at Airbnb, VRBO, the sites, and what other people are getting. And I completely underestimated all of the other fees and taxes and things that were coming out of that amount. So it's very easy to look at, holy moly, these people are getting $200 a night for this thing. If I only rented this thing out 5 days out of the month, like I'd still be rolling in cash, right? But that is if you're doing all the maintenance yourself, you're doing all the cleaning yourself, you're buying all the stuff and it's not coming out of that fund. And you also have to pay Airbnb because they take a cut. You have to pay VRBO, they take a cut. You're paying web hosting fees. There's all these fees that come out of it. And then, oh, by the way, because it's an Airbnb, there's an extra tax now that we're going to charge you because we passed an ordinance in our city. So that leads me to my second point. When you start looking for a property, the first place to go is the assessor's page in the community that you're in, and to look at what's the zoning for the property that you're looking at. So in our community, you have to have something called a letter of compliance in place for any rental property that gives you permission to rent. And there's all these things that you have to do, including your spindle spaces have to be so many inches apart, and there can't be cracks in your concrete. I mean, stuff that you would never imagine that could be an upfront cost that you'll have to deal with, as well as it dictates how many people can be physically inside of that property at any given time. So if you're going to own or occupy and rent it out, can you do that? Or can it be only one not related person to you based on the bedrooms? Does it have enough parking spaces? All of that. So that's all on the assessor's page. And an agent can help you also talk through what one zoning code looks like versus another one. So there's just a lot of little things that can kind of get you from a monetary standpoint. And I've joked since I had my Airbnb that if I had done my math and taken 40% off the top of what my numbers were, that then I would have been about right for what we would have made off of it when you factored in all those costs that I just talked about.
Can you talk a little bit about finding tenants and managing tenants, and maybe more in like the long-term rental space? Allison, have you done long-term rentals? No. Okay, maybe nobody here has that.
I have a few, and
Okay.
I would just speak to that as like someone who self-manages rental property. I think there's a breaking point for everyone, and where they're comfortable managing a certain number of properties. For me, at the most, we had about 40 doors of rental property with a partner. And that was a lot to manage. You're the one fielding maintenance requests generally as a young investor. You're the one oftentimes doing work. So there comes with, some level of handiness and having access to tools and that type of thing. So if that's attractive to you, it can be a really great way to increase your margin is self-managing. But figuring out how many is comfortable takes a little bit of practice. So right now I have 2 3-plexes and an 8-plex that I manage, and I'm still self-managing those. So as the owner, I can find tenants and show it to potential tenants directly. So I post through Zillow, and they've changed that now. So it's $10 a week for listing there. So that's a cost you have to figure for advertising. But Zillow, they have a lot of really great tools. They will field potential applicants. The background check and screening and all of that can be handled through Zillow. They also push to other platforms. I believe they have the capacity to push to other platforms like Redfin and apartments.com and Hotpad, some of the other listing services where people would be looking online. So that's what I use for advertising. I also use cozy.co for managing tenants. I use that primarily for lease management and rent payments, but they also have some tools on there for maintenance requests and that type of thing. It's pretty smooth, free to use as a landlord. I'm not sure where they make their money. I think it might be on application fees and maybe the fact that they're holding rent payments for a couple days before transferring. But from my end, it works pretty well and is free to use. And then let's see. Rental agreement or a lease agreement. I would encourage people, if you're looking at getting into this, there certainly are free lease agreements you could find online. I would recommend having a local attorney look over that and make sure that it's applicable for your area and that you're kind of covering your butt for local requirements. You know, we don't have, in Des Moines, we have a rental certificate process, but we don't necessarily have like the density limitations that Ames would have being a campus town. So you want to make sure that your lease agreement is applicable for your market. And if you find a local real estate attorney, they could probably do a pretty quick review for a nominal fee to make sure yours is applicable. I think that covered most of the basics. Were there any other questions on that?
Somebody just asked, can you maybe add to the chat what the name of the website you use for managing is?
Sure.
Thank you. So then the last kind of type of investing I wanted to talk about was house flipping. I know we had a few questions throughout. So if there are any other house flipping type questions, if you could add them again to the chat. I've kind of lost track. Sorry, we've had a lot of great questions. I know that we have about 8 minutes left here, and I do have one more slide that I want everybody to kind of talk about. But maybe you can just, one question we did have about house flipping is, how do you know how much something is going to cost to repair before you purchase the home? And what are things that maybe you do before purchasing to make sure that it will be a lucrative investment and not end up costing a lot more money than you originally expected?
Right. So this gets back to kind of that DIY versus outsourcing that's on this slide. Figuring out what, if any, work you want to do yourself is important. There's definitely opportunity to increase your margin by doing that, but you're also going to be spending a lot of time in the house doing physical work on the property. And you obviously want to make sure you're doing it to a high quality as well. So if that's not your cup of tea, finding a general contractor is probably the best place to start, or a handyman type contractor who can kind of give you some pointers and general advice on what items are going to cost. For me, we're doing pretty substantial renovations. So our average rehab is about $150,000 into the property. And so I do self-perform a lot of the carpentry work with a couple in-house assistants, and then hire most of the specialty trades out to subcontractors. And so that just takes, time to build those relationships and be getting into deals and develop an understanding for what types of things cost what for your local market. It's kind of a catch-22 because you want to get that advice from contractors early, but you can't be spending a lot of time looking at properties and walking a ton of contractors through before putting an offer in, because especially in a market like this, you'll probably lose the deal. So if you have like a family member or a close friend or someone who has more experience in contracting and maybe hiring out work, leaning on them pretty heavily is going to be important early on. There's also websites like HomeWise, and I'm trying to think what else. There's like cost estimators out there for work. They can be pretty accurate, but I've also looked and seen like some pretty unrealistic numbers. So getting a baseline from those is a good starting point, and then getting more specific as you go.
Awesome.
Probably also important to throw out that there's a permitting process that occurs in most towns. So you can put a backsplash up yourself and you don't have to get a permit for that. But if you move a wall or you plumb a bathroom, you got to pull a permit. And they don't like it when you don't do that and you do the work anyway, and they'll come back and they'll find you. So good to do that up front.
Definitely. Yeah, that's a great point.
So the last thing I wanted to talk about is, what should somebody be doing now to get to the point where you all are and can really be doing this either as a side hustle or a full-time job? So maybe each of you can take a few minutes, well, about a minute, to talk about like any advice that you would have or what you would say people should do right now so that eventually this is something that they can be doing.
So I would say number one thing is build up your contact database, build relationships with those out in the community, no matter how far out you are from, starting the adventure that you're, interested in, because those contacts will, help you so much when it comes time. And then also, credit score, making sure you have good credit, whether you, are going to go talk to a local lender or private finance, cash, whatever you have, you never know when you're going to need a loan. So, start working on your credit now, because that is super, super important.
Yeah, I would just piggyback off of that to say, regardless of if you're trying to get into real estate right away or not, I think getting your financial house kind of in order and looking at treating your life like a balance sheet, and being realistic about setting budgets, saving money to be putting into investments. I mean, real estate can be an awesome long-term vehicle to generate wealth. And the best time to do it was 10 years ago, but if that's not the reality for you, the best time to do is start saving now. So, there's a lot of blogs and resources out there for financial freedom and personal cost management, but treating your expenses kind of like a business and trying minimizing your outflows, maximizing your inflows. If real estate is an interest full-time, that's great. But if not, being able to put some money aside to start building a fund to put down one down payment on a property in the future is an awesome place to start. And just making that a regular thing that you're doing. You're not even thinking about it. You're just putting money aside for your real estate fund. I would say that's the number one thing you could start doing right now if you want to purchase real estate in the future.
Same song, different verse. I think my own personal experience, I was first generation college grad from my family, and my parents did not participate at all in the payment of my school. So I worked all through school, but left with some student loan debt, and then also had a really good time. And so it just didn't occur to me until it was far too late how important it was to stay on top of one credit score. I mean, we've hammered at that point, but it's so important. And then keeping your debt to income ratio low. So I've been in a spot where I've made a ton of money, but I also had a ton of debt because I was sitting on this mountain of student loan debt that I just kind of plucked away at paying off. And that's really inhibited me from being aggressive in terms of going into the market. And it has made me have to take a lot of smaller baby steps to get into it and then to leverage what I've had. So if you want to do it fast, start saving now.
And real quick, Megan, I did see that Sam asked a question. Would you recommend putting money in the stock market or save money in a savings account? Stock market can be risky depending on what type of investments you're investing in. Maybe look into CDs at a bank. Those pay a higher interest rate than a savings account would. You have to have your money in there for a certain amount of time. But CD interest rates vary per month. So just keep an eye on that. It's a little bit safer investment. So yeah, just my 2 cents there.
I had one other point on that note too. Another thing that's kind of a new opportunity in real estate is the idea of crowdsourcing financing. There's a few websites out there that are almost like Robinhood for real estate. There's one called CrowdStreet, another one called Fundrise, and a few others. And some of those, the minimum investment is as low as $500. And that you would have a very small equity stake in a commercial real estate investment somewhere. So if that's your thing and you just want to learn about the process and maybe what those cash flows look like, you could put money into one of those programs right away. They pay out a return, but they also have fees like a brokerage would have. So one other opportunity if you want to just get a taste for real estate and not physically be buying properties at this point.
Awesome. Well, I know we're past our time and there's still a ton of questions that we didn't get to. If you all have time, maybe we can try and answer a couple more, but I just want to say thank you so much for joining us. This was a wonderful conversation. All of the panelists' contact information is available in the slides, and we'll be sending those out after the fact. We'll also be sending a recording and some cliff notes from this conversation. So if there were things that you wanted to revisit, we'll have that resource ready for you to do that. And I also wanted to give a quick shout out for another free workshop that we have going on in a week and a half on Saturday. The Papa John Center, along with the Ames Chamber and the SBDC, are putting on a full day workshop with free food, free to attend, and it'll be like a crash course in starting your own business. So we'll talk things about legal, accounting, marketing, just a quick one-day session to kind of talk basics and foundations for starting a business. So thank you again. This has been a wonderful whole series of the Side Hustle Start Something series. Thank you for everybody who has participated and all of our speakers. And with that, I know we're at the end of the hour. So thank you so much.
Thanks for having me, Megan.
Thank you.